Hello, good afternoon, investor and corporate. Welcome to Set Digital Roadshow first quarter 2022 performance review. This section will run about 45 minutes, including Q&A. Company will start the section by 30-minute presentation, followed by 15-minute Q&A. And during Q&A, investor may review question in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. So may I now invite NR Instant Produce Public Company Limited to start the presentation, please. Thank you very much.
Thank you very much to the stock exchange for this opportunity. Sawasdee krap to everybody who's listening in. Good morning. I'm currently in LA. Unfortunately, unable to return back to Thailand, and Kun Panarai Kun Turpong is in Thailand. So, allow me to start to share. So, our business at a glance, we've broken it down into a few big buckets. So starting off with, our innovation, our investments in our portfolio, the startup companies that we have. We're very pleased as to the progress. I'm very excited actually, especially with the recent legalization of cannabis. We'll talk about that in a moment. Decarbonization, I believe, is going to be the biggest thing that we will ever do in our lifetime. This is something we announced in the beginning of the year. I'm very excited. It's going to longer term business opportunity for us, but definitely a very important part of our business moving forward. Plant-based. As everybody knows, our key strategy here is to be the leading OEM manufacturer of plant-based foods with key factories around the world, in key regions around the world. Specialty, where we have ethnic, hemp, as well as pet food. And then, of course, then is our community and e-commerce initiatives. So let me start off with quarter one. I would like to kind of re-emphasize that our year tends to be very cyclical. So quarter one tends to be our weakest quarter. Quarter two, customers tend to build up stock. Quarter three tends to be a stronger quarter, and we tend to fairly much peak in quarter four as customers order for the New Year's and Chinese New Year. And so that's pretty much been historically over the past, for at least for the past 4 or 5 years, on how our performance has been. Having said that, as you can see here, on a year-on-year basis, we grew nicely in terms of our revenue by 28%, gross profit as well by 77%. Our SG&A did grow by 100%, largely driven by our growth in e-commerce. But our EBITDA as well as our net profit largely grew in line in parallel with our revenue growth. In terms of our revenue components, you can see here as a breakdown. One thing I'd like to point out is as you see our revenue bridge between quarter one of 2021 and quarter one of 2022, that growth in part came from basically e-commerce sales, which is basically the brands that we acquired, Prime Labs, WellPath, and Indeem. We also had growth in our specialty foods, driven largely by our branded products. And we had I would say a slight decrease in our plant-based, and largely, since our joint venture with PDT Group back in 2021, middle of the year, a large part of what we've been doing in plant-based is through strategic joint ventures. We do plan, however, and I'll talk more about this in a moment, how we're going to consolidate plant-based revenue into the company, but we'll talk about that more later. So in terms of revenue growth, as you can see here, historically in 2020, for example, you can see that our revenue tends to grow from the low being Q1, and it tends to peak in Q4, and that tends to happen in 2021 as well. Largely, our view is that this is going to happen in 2022, just because of the seasonality as well. We do hope, however, that we will try and be able to lessen the cyclical part as we increase the amount of our sales via the e-commerce channels, which tend to be less cyclical, less seasonal, basically. Sorry about that. So from a gross profit margin perspective, we have seen some very good benefits in terms of the baht depreciation, largely from our Thai factories, and we have two primary factories that we export in specialty foods. It's almost more than 90+% sales in US dollar. So with the Thai baht depreciation, it's actually improved our gross profit margin quite substantially. And so we only tend to benefit from this. From SG&A, as you can see here, there was a jump year on year of 99% in terms of SG&A. This is largely because of the increase in expenses in our e-commerce Amazon business, as well as largely driven also by an increase in salary expenses as well. We do believe after this year, from a salary perspective, as well as a fixed cost perspective on our Amazon business, we would have fully built out our organization. And so we actually believe that the platform will start to become more accretive at the beginning, or probably the tail end of this year, as we continue to grow our e-commerce business, and hence a proportion of the SG&A relative to revenue will start to fall. It will start to fall significantly, probably towards Q4 of this year. And so as we grow our e-commerce business, we're going to start to see more accretive hit to our basically EBITDA, as well as our net profit margin from e-commerce. One thing I would like to add from well, we can talk about it in the net profit analysis. In terms of EBITDA, we did have an increase year on year of 23%, largely aligned with our increase in revenue of around 20+%. You can't really compare it on a quarter on quarter basis, as I mentioned, just due to the seasonality. But we did have an improvement in higher gross margin. We did manage to sell a part of our boosted e-commerce stake. And so just as a reminder, we originally invested $3 million into our e-commerce partner in the US at a post-money valuation of $80 million. Recently, in Q1 of this year, prior to the Ukraine invasion, they raised a Series B round at around $730 million post-money, and we managed to sell at that point. The former CEO of Amazon actually became an investor, and so we had a nice exit there. But it was somewhat offset by a loss in some of the shares that we own in Australis, which is a cannabis company. And the shares of that company fell basically in line with the tech stocks here in the United States. And so we do believe, however, that that company's shares should gain, as we're actually seeing with the Dow Jones actually today, with tech rebounding. From a net profit perspective, we did grow year on year by 20%. Again, you can't really compare on a quarter by quarter basis, but I want to point out a few things. So I know that we've spoken to analysts, and there is a concern on basically they'd like to see core earnings and grow. And we do believe over the next second half of the year that you're going to start to see this, and we'll talk about this at the very end of the slide. And that's largely going to be part due to improvement in gross profit margins, as well as reduction in SG&A. In terms of net profitability, there was a partial sale of our boosted e-commerce, which actually helped as well. And then as you can see here, we did have improvements in terms of gross profit margin due to the Thai baht. I'm very pleased with where our portfolio is going. This is extremely important. I know a lot of people discount the value of our investments, but we're actually seeing that we are able to exit some of these investments that we make. So, for example, as I mentioned, we've now exited 20% of our stake at Boosted. The first exit was in summer of last year at 5x a return. This recent round was around, at 80 million post money valuation. We exited around somewhere between 700 to 800 million. Wicked is doing very well as well, having raised at around 150 million. As you can see here, against our original investment and founding round, we're seeing more than 3 to 4 times basically improvement in terms of the overall latest valuation round of these startups. Obviously, there's the picture is less cloudy with the war in Ukraine. However, we do believe that we're going to continue to try and exit these startups and then reinvest into basically our decarbonization projects, as well as interesting strategic startups moving forward. In terms of our key financial ratios, largely, I believe that we're still prudently run, given our growth profile. So basically, on our key operating metrics, as you can see here, if you follow my mouse, it's still pretty stable. In terms of overall return, we're starting to throw off increased returns in terms of return on equity as well as return on asset. From a leverage perspective, we're still under 1 from a debt equity perspective, as well as especially from a net debt perspective. And I think we're very prudently run from a net debt to EBITDA perspective as well, with under 2 in this recent quarter. So I want to quickly just talk about the key industries. I believed in general. I just want to talk in general, and you can read through this later. I think the key things affecting our industry, first of all, ethnic foods, right? The container shortage is now starting to abate. We've seen container prices actually fall now by about 70%. So from a high of $25,000, it's now down to about $7,000 to $8,000. And although we don't actually pay because we sell an FOB for the container, it does mean that our customers now are more bullish in terms of ordering product. And so we expect to positively impact us in the second half of the year. Obviously, the Thai baht depreciation is helping us a lot because more than 90+% of our export is in US dollars. From a pet food perspective, I'll talk more about this later, but the industry is growing very strong, and we have a factory that's going to come online in July for pet food. And I'm super happy, super excited about this. Hemp legalization, I think, is going to be massive. It turned out to be exactly what we thought it was be. We're going to start to sell, and we believe that we're going to start receiving pretty income this month through our THC clinics owned by GTH in this month. From an Amazon perspective, we actually slowed down the acquisition in Q1 due to the war, and also due to results in due diligence. We actually didn't approve 2 deals. However, we have 2 deals in the pipeline that we're in the process of closing. In terms of plant-based, I think there's been a lot of talk about plant-based. We're still seeing average CAGR in plant-based at a very good clip. And so if you were to average CAGR over a 3-year period, especially in the US and Europe, where predominantly our sales are based, they're still growing at a double-digit level. However, if you just compare it on a quarter-on-quarter basis, if you're looking at Beyond's figures, for example, they're actually struggling, and they are not an indicator of the whole market. And the reason I say that is our focus has largely tried to tend towards OEM manufacturing, private label, as well as working with brands as well as our own brands, whereas Beyond is a pure brand play. And we've always known that as the industry matures, private label and OEM manufacturing is going to continue to take a larger share, and that's exactly what's happening. So I'm not going to talk a lot about this, and we can talk about this in Q&A if you're interested. We announced in the beginning of the year our initiative around being carbon negative, and that's basically negative emissions, and that's basically taking agriculture residue, converting it into solid and liquid carbon, and then sequestering the carbon or turning it into basically sustainable fuel or renewable natural gas. We're we're still in the process. We haven't closed two investments in this space where they have, I think, world-leading technology in terms of decarbonization. It's pretty amazing what they're doing. They got global prizes, and so I hope to announce this very soon. And I hope that we'll have two plants, which are negative emission plants, um, in the United States and in Thailand, hopefully in the next 24 months. It's very exciting, and it's all within our food mandate. Okay, so we're taking things that people burn. The world burns 4 billion tons of agriculture residue, and we're stopping that burn. We're converting that into basically solid carbon that we then bury, and we get carbon credits. So I want to give a brief update on basically specialty foods. And so we have a new factory that's still on track to be complete in Q1 of next year. It's a dedicated sauce factory. I'm sure everybody has seen the news of the sriracha shortage. I actually am not as bullish on the sriracha opportunity. And that's the reason is we've spoken to a lot of our distributors, and we believe that this is a temporary, basically shortage. When Hoi Fung brand comes back on the market, basically the market will revert back to the Hoi Fung brand. That's a testament to their brand. And so we do think there's an immediate opportunity, which is why we're working with all our distributors now to try and pump up as much product as possible, especially for sriracha in Europe and the United States. So for pet food, we expect our factory to be operational by mid-July. It's basically a week off track, but largely on track. We do expect to end the year with probably 10% of our revenue coming from pet food. The net profit margins are extremely good. It's probably double our net profit margins. And we expect to be almost full capacity by the second half of next year. There's very strong demand for pet food, and we're very excited with this. And obviously, we have plant-based pet food in the pipeline. So I want to talk a bit about the cannabis legalization. So as you know, we own 75% of a company called GTH. GTH has a few components to the business. The first component is we have a hemp CBD farm in Khon Kaen University, as well as we have THC clinics here in Thailand. So you need a medical license in order to import basically the plant and the flower, and for dispensing. And we have that license. And so through GTH, with the help of Australis, we now seek to basically introduce cookies, as well as through Audacious, some of the world's leading cannabis and hemp products into Thailand. We'll see. I believe the first shipment is going to start next week, and so we're going to have to see how that actually goes from a bureaucracy perspective. As you know, regulatory-wise, everything's open, everything is legal, everything is decriminalized. We just now have to see, as we actually bring product into the country, how that process actually turns out. If it turns out as we hope, then we're looking at a very sizable opportunity for multiple product streams in the future. We're also still working on local grow with Khon Kaen University. So it's a two-pronged approach. So import as well as local grow. For e-commerce, currently we have 2 deals in the pipeline, as mentioned, that we hope to close in the next probably 2 to 3 months. Somewhat delayed. And as I said, we slowed things down in the Q1 just to see how things were going. But we should be on track in the second half of this year. I'm also pretty excited. We're going to announce a partnership to distribute our products in Thailand. So basically, we bought 3 of the leading brands in the United States that sell on Amazon. So #1 testosterone brand on Amazon, #1 vitamin gummy brand in Amazon. We're now working with another public company to basically distribute that product here in Thailand. So look out for their announcement in the next 10 days. So I do want to talk a little bit about basically 2022. I'm going to skip this slide for the moment, okay, because this is just a summary of what I've just discussed. Or maybe not. Okay, so I would say the first half of this year, has largely been extremely interesting. And although we were somewhat concerned about the impact of the war in Ukraine, largely I would say it's been, interestingly enough, we've been a net benefactor of everything. Although we are seeing some slight inflationary pressures, I think overall the war has basically made our business, I think, in the second half of the year very interesting, with a lot of very good opportunities. Also, recently we launched Alt Eatery, which is our alternative protein cafe. I think it's here as well. Yeah, and just to recap, uh, our pet food facility comes online in July. And then we're going to continue to acquire two or three, a few more brands that are the top sellers in Amazon by the end of this year. We're going to be focusing a lot, basically, on core profitability, and then as well as pursuing negative emission projects moving forward. Okay, so I want to talk a bit about plant-based and what's happening in plant-based for our company. So first of all, when we first IPO'd, we did a key few investments in some startups. So the first one was Conscious. I'm very happy. So we own 20% of Conscious, and they're just about to launch their product into the market. The right-hand man of Steve Jobs just joined their advisory team. Well, Steve Jobs passed away, but the right-hand person. And I think they're going to do fabulous. Wicked Kitchen has just raised at 2.5 times our valuation. They've grown very successful in the US. Meatless Farms has also raised capital at 2x our valuation as well. To be honest, the performance has not been as great as Wicked or Conscious, but still, they're doing decent. From Planet Bean perspective, I would say last year was a challenging year with Delta getting a new plant of that size online. But now we're starting to the factory is now in order. In quarter 1, we still had some losses in the factory as we are ramping up production and getting a hold of the factory. I think what you're going to see in the second half of the year is continued lower losses in quarter 2, probably with break even in quarter 3. And one of the reasons I'm saying that is that we're just to tie up a few major deals with some very large plant-based companies to make our factory in Europe one of their key production hubs of Europe. So I'm super excited of this. I want to talk about our experience store here in Thailand in the next slide. And then I want to talk about Tofurky. I think we have a slide on Tofurky. Yeah. So we just recently launched our experience store on Sukhumvit Soy 51. So if you're ever around the Soy 51 area, I would love for you to please stop by. I'm usually there if I'm in Thailand. It's so basically it's 1 part cafe and coffee, another part eatery, and then another part retail. And so we hope to open basically a string of these along PTT's footprint, as well as key strategic locations. We've been open a month now, and we're extremely pleased. We're actually tracking basically a little ahead of where we were forecasting to be, despite our location. Even though we have a great location on the main road, we knew that we had limited. We weren't in a shopping mall, and I think we're doing exceptionally well. Very, very pleased. And it just proves that this concept, where we have basically 100% plant-based restaurant, 100% convenience store that's plant-based and environmentally friendly products, and 100% plant-based food, as well as coffee products. As long as it's priced right, basically we're pricing it at basically the middle market, but tastes just like normal food, consumers will buy it, and I think we've proved it. And I'd love for you guys to go and try it. Despite, I think, what everybody thinks of NFTs, I think NFTs is an amazing digital platform for building community. Right now, through Nov Eats is basically, you can also order Nov Eats if you want on Grab. Nova Eats is our plant-based McDonald's, and we've been serving this since November of last year, and we've got a lot of good reviews, as you can see here. It's almost 5 stars. Um, with our NFTs, we plan to launch Nova Eats into the United States. I would say that plan is probably going to be slightly shifted towards the end of the year rather than the middle of this year, due to the whole kind of like market. But let's see how things played out. But for us, what NFT is about creating a community of engaged consumers on Twitter, on Discord, that helps us improve our experience over time. In terms of Plant and Bean, our facility in the UK, as I mentioned, I'm super happy that that there's a few top companies that are appointing us to be their European manufacturing hub. Number two, the Plant and Bean facility in Thailand, a joint venture with PDT Group, that's on track, scheduled to be operational in the beginning half of next year. And recently, we announced that we were going to acquire Tofurky, which is the number 4 brand in the United States. And I think I have a slide for this. Okay, so we announced a month ago that we were going to acquire via a convertible bond, or I think the way that we disclosed it was a financing of Turtle Island Foods. So a little bit about Tofurky. Tofurky is the number 4 brand in the United States, as you can see here, number 4. Beyond Meat, number 1, Light Life, Impossible, number 3, and Tofurky, number 4. It's one of the early plant-based pioneer products. They have almost 40 products distributed across 26,000 channels across America. Currently, our team is at the Tofurky site, and we're very pleased. They've got very good capacity. They have the room to grow their revenue from currently around $50+ million to $140 million revenue without significant further capex. The reason that they sold, or not sell, is that they're open to our deal, is because the founder, Seth, is 70+, and he's looking to transition out, and his son-in-law is the CEO, is going to take the helms. And so the deal is a cash plus share stock swap into our subsidiary company called No Foods. So it's a swap into our subsidiary company, not into NRF. And so this gives us confidence that they are very in line with us. You know what? And actually, their net take home from a cash perspective is actually less than is actually not very much. And so largely they would have to believe that we would be able to IPO our company in the next I would say 3 to 4 years. I think the key rationale here is it gives us a manufacturing footprint in America, number 1. Number 2, their products are very similar to Plant and Bean, which means I can take the Tofurky products and produce it in Europe through Plant and Bean, and I can take Plant and Bean's customers in Europe and produce it in the Tofurky plant in America. And this is something that we've always looked at around, which is basically reduce supply chain logistic costs, be basically produced in region, distributed in region. And as you know, due to the logistics crisis, now it's an issue of resiliency, which is why everybody's actually looking at how we can do this. So I'm very excited about this. We hope to close the deal in the next 2 months. I'd like to just recap the way that the deal is structured. So we're basically going to issue debentures is the way that we're going to fund it for $35 million. We're going to refinance their existing debt. We're going to give them 18 months basically to grow, at which if they hit the targets that we've discussed, then we would then trigger an option where we can buy the company at a fixed price, which is cash plus a share swap into our subsidiary company. If it doesn't happen, then they would have to refinance us out. The company itself and the assets, we believe, gives us 2 times cover, basically our debt. We've looked at this from a legal perspective. We've hired consultants. We've hired advisors to look at this. So we feel very confident that we're very much protected in this deal, as well as gives us tremendous upside to be probably, after we're done, probably the number 3 company in the world for plant-based Beyond and Impossible Foods. So as you can see here, if we acquired Tofurky this year, right, on a pro forma basis, 39% of our revenue would be plant-based. I guess a lot of people have asked us about plant-based revenue contribution. One of the reasons we decided to go through strategic JVs was basically to ensure that we had key strategic partners. But very mindful that ultimately this is what we're trying to do, is grow our top line and bottom line as well. I want to quickly just take another 2 minutes of the Q&A time, just very briefly. I'm almost done. I've got 2 more slides left. So for 2022, we're basically guiding still 50 to 60%. I know there's some doubt about this, but we're still very, very confident we're going to do this. Some of the key reasons is basically a lot of organic growth due to a few reasons. So one is the pet food business. We believe that's going to contribute a lot, basically 10% of that growth by the end of the year. Cannabis decriminalization, the law's out. Let's just see how we import it in, but we can see a very good uptick both on revenue and a net profit perspective going forward, as well as basically seizing deeper opportunities due to the Thai baht. We're looking at sriracha, but let's see how that goes. I still think that's a temporary blip. We also do see Indeem is actually our e-commerce is actually tracking very well, as well as a few additional investments we see in the pipeline. So the rest, as I mentioned, it will be through basically some organic plant-based expansion, as well as expansion of our stores. I want to slightly talk more about how we're breaking this down. And so as you can see here, growth towards the end of the year, it's going to be driven somewhat by e-commerce and specialty foods, also with growth in plant-based as well. And we do believe that basically from a net profit perspective, EBITDA margin, as well as gross profit margin perspective, we should be in line from a ratio perspective as of last year. But let's just see. I think the Cannabis Decriminalization Act could actually improve our margins, but so let's just see how that goes. With that, thank you very much. I'd like to open the floor to questions.
I would like to thank you, investor and corporate, for joining the conference. We look forward to welcome you all again in the next quarter. Thank you very much. ขอบคุณนะคะคุณแดน ขอบคุณ
Yes,
ค่ะ
สวัสดีครับ everybody.